Well, my name's Ken Hoder, and I have created a stochastic. I call it the kStochastic, which is based on this fundamental stochastic most everybody uses. However, what I tried to do is I tried to tweak it a little bit so that I could front run most of the other traders. There's about 100,000 more traders in the industrials, and they learned a particular technique of how to get into a trade. So what I wanted to do is design something a little bit better than that so that I could get in a day or two in advance of when they would get in. Because when they get in, or so what usually happens is I get in on my kStochastic, a day or two later, the market takes off because the other traders that use the stochastic basically all see the same signal and they basically push the market up. I kind of like that. That's kind of nice. So this is a sample of what I created is called the kStochastic. And there's the typical shape of the stochastic is the same as what you usually see here. But then I created some lines that basically tell me when a transaction would start, when you would actually do a buy signal here. And so here is a vertical bar which says from the red to a green here, and it creates a buy signal. And the trade station has it all coded up, so it actually entered a buy signal here, bought TQQQ, and then watched the adaptive moving average here as my exit signal all the way up, and it exited up here. I'm going to zoom in on that in a little bit, and exited the trade for a very nice profit. So this bottom is actually a profit P&L, which shows a very nice profit, and the green bar down here is the individual trade profitability. All right, and so then on this chart, this is a large chart. We will go into some of the most recent information here. It's pretty complicated in this area here because my first trade, even though I got a stochastic hit here, it was not a major takeoff. I made a little bit of profit, but not very much. So I ended up getting out of the trade. And then again, here was another stochastic buy, which got me back in. I have an emergency exit here. And I'll go into this in a little more detail. And then I ended up moving it up. So you end up guaranteeing that you don't go through this much of a loss. All right, let me show you that in more detail. So here's the first trade that I did. This is way back here is where you see a buy signal. This is the first one that I mentioned in the previous few minutes. And so I got a buy signal here. And then there's a second buy signal. This is typically where the industrials people would get in. And you can see what happens to the price action. It tends to shoot up a bit, which is great. I like that. And then if you look at how the adaptive moving average kind of hugs the price action until right near the end here, and you see that the price ends up dropping below. So the close drops below the adaptive moving average. That says that, okay, get ready for an exit. If it drops below this low of this bar, then exit the trade. And that's exactly what it did. And so it exited the trade right on this bar. Kind of nice. Keeps me from a little bit more of a dip. Usually I just want to make sure that this isn't a major dip that goes all the way down, and then crashes. So I'm just trying to minimize my downside risk and maximize my profit factor. So now let's go into the excruciating detail of the recent trades. These were not trades that I really enjoyed. When you have a good chunk of change on these trades and triple leveraged ETFs, it can be kind of scary. Definitely an emotional event. So here is the stochastic. It's coming down nicely. So I get to see a few days before. I say, okay, here it's coming. It's like, all right, there's a good chance that it's going to be a turnaround here sometime soon. It's actually got to bend up here a little bit, right? And that'll cause the stochastic to basically trigger. And you see it turns from red to green here, and it produces a vertical bar. And I've done this. I did this on the TradeStation, and then Tim Sire did it for the Thinkorswim platform as well. But then on the TradeStation platform, what I end up doing is I actually enter the trade. You can see that I actually entered the trade. So I know about the night before that something is going to happen. So I watch it very closely in the morning to make sure that what's going to happen doesn't cause any kind of aberration to the market. My computer's on, everything is all set up. I have a couple of backups. I got my phone, I got my computer. So everything is all set up to know that I'm going to be taking a trade in that morning. So I take the trade, and then the subsequent days, the price action moves up. So one of the holes in the kStochastic is if it turns around, if it goes up and down real fast, then it is basically, it won't exit cleanly. So what I had to do is I have to draw a trend line. I use a trend line underneath the low of the recent 2 days for my own purposes, and I use it as a judgment call. And then as time goes on, as the price action starts moving up, what I end up doing is I'll move this emergency exit up, and it will get up to hopefully I try to get it up to the point where it's profitable, and then I just leave it from that point on. I don't touch it anymore. So here is what you see. So it entered here, and then it exits. I mean, not adapted on in the emergency exit line, and you can see that line, emergency exit line. So these cyan lines, this one and this one, are the modified versions of what I was using for the emergency exit, moving the emergency exit. Emergency exits are here in the left, the yellow. So here's a yellow line, which is the emergency exit, and then here's another subsequent line when it entered the second time on the price action using the kStochastic. So here's the price action. It says, okay, buy it. And so I went over there and bought it, and then the price action started tumbling down, right? So it kept going down, and it's like, oh man, I'm going to lose. Then, but I've got this much room to go down. It could actually go down this much. I do not like these tails like this. These tails that produce this long down signal. This gives me a very large potential loss from when I enter. I'm entering it way up here. Not very good. However, on subsequent days, it only went down a little bit, and then it came up. And as soon as it gapped up, that's where I move this emergency exit on up to this point over here. So now I've got a better or minimize my downside risk. So my risk is only just a small amount here, and from that point on, I'm golden. So that's the most recent trades. I hope that helps. I hope that explains the adaptive moving average. And if you go to ken.xsprofits.com, you can then go, if you got a TradeStation, go to the area there that says TradeStation code, and the very last one on my list is the kStochastic version 8.8 that I use for trading my IRAs. And it has all the code, all the details, more details than I will ever cover in a simple presentation like this. But if you are interested in all the details and how the algorithms work and a lot more, go take a look at that code and enjoy. I hope this helps.